What is up, YouTube? This is the Working Investor. In this video, we're going to talk about ticker symbol CEFS, which is a closed-end fund of funds by SABA. And they basically try to buy things at the discount to the NAV. And they have proven themselves to give you a total return in the past 5 years that is comparable, if not better, than the total return of the S&P 500 by looking at Seeking Alpha. And if you look at year to date, you're going to see that even though the market has been down, they have done better, withstanding the fall than the S&P 500. So better total returns than the S&P 500 over the past 5 years. And on the downside, they've proven themselves to hold themselves up better. This is not a coincidence. And we're going to dive into this fund a little further. And I want to do a shout out to one of my subscribers who suggested this video. So shout out to Music Maker. I appreciate your comments. And this video is in credit to Music Maker. So let's start talking about the fact sheet on their website and talk about what this fund is. So the SABA Closed-End Fund is an actively managed ETF that seeks to generate high income by investing in closed-end funds trading at a discount to net asset value and hedging the portfolio's exposure to rising interest rates. So those are very important things because the name of the game, if you by doing my research in closed-end funds, the name of the game is to try to buy stuff at a discount to the NAV. That's the name of the game with the closed-end fund games, what I understand. So if you don't want to buy funds at a premium, you want to buy them at a discount. So you get a good price for it. Closed-end funds is a very general term. It's kind of like you say ETFs. I'm investing in ETFs. Does that mean anything? No, because there's so many different types of ETFs. There's a whole myriad of ETFs. So same thing with closed-end funds, that just because they're not making more shares, they have a fixed amount of shares at inception of the fund. But there are different types of closed-end funds. There is fixed income based on, bonds. They have commodities. They got gold, precious metals. They have equities. So just like the same thing in ETFs. So by investing in, but the special thing with the closed-end funds are that you could buy them at a discount at certain opportune times. Sometimes when there's fear in the market and certain underlyings, people want to sell them and you could get them at a discount. So that's the name of the game. So you could see that this fund, instead of trying to be a master myself in closed-end funds, I leave it off to the experts and they're going to go hunt and try to find funds that are at a discount and try to hedge out the portfolio. So let's go to the second paragraph. CEFS offers access to SABA Capital's portfolio managers who have years of experience trading and hedging closed-end funds. SABA Capital's investment process includes proprietary screens that dynamically rank closed-end funds across a variety of factors, including yield, discount to NAV, and quality of the underlying securities. CEFS seeks to outperform index-based closed-end fund products by actively trading the portfolio in an attempt to capture the widening and narrowing discounts to net asset value. So one of the questions people are always going to jump at, and I know I'm going to get these questions in the comments, is, oh my God, look at the total annual expenses. The total expense ratio looks like it's 5.81%, which is ridiculous, right? But a lot of products, it looks like closed-end funds, and I'm familiar with business development companies, they have to disclose if they have in their fund, if they're a fund of funds, each fund that they own, they have to add that in to show you all. So this represents all the expense ratios of all the funds, including their own. Because if you go to management fees, it looks like their management fee is 1.1%. And then if you go to acquired fund fees and other expenses, that's 4.71. So if you add that up, it's 5.81. So it looks like they're maybe charging you about 1.1 plus a little bit of expenses, and then they pass along the other stuff. So that's, kind of answers the question. And as an investor, for me personally, I care about how it's performing total after, when you see the performance, that's after the expenses are taken off. And if they're performing well, so, of course, 1.1% is not the cheapest. You can get Vanguard product for 0.03. I've seen such a low expense ratio. But if it's performing for me, I'm happy with it. And you could see here they hold 97 closed-end funds, and they're diversified through amongst a lot of things. Let's look at their holdings. Let's look at a few other things. Actually, here they have a nice breakdown. So you could see here the biggest holdings, 48% is equity, 29% is fixed income, 10% 14% is alternative, and 10% is mixed allocation. It kind of reminds me a little bit of the Ray Dalio all-weather portfolio where, he has less equity. He has 30%. This is per ChatGPT SPY, but you can see a lot of fixed income in there, maybe some gold and commodities in there. It reminds me a little bit of the all-weather portfolio of Ray Dalio a little bit. And if you look through their holdings, like their largest holding is like BlackRock, ECAT. Then they have BlackRock's tech and private equity. And look at the third holding. They have gold and precious metals. They have dividend and income. They have dynamic income. So they have a whole bunch of different funds in there. And there isn't a large mystery of what their dividends are going to be. They look like they've been giving pretty much 14 cents dividends every single month. And we'll calculate the rate in a minute. Like, I think it's around somewhere between 7 and 9%, but we'll calculate it. So, I'll take all the guesswork out. You'll see that it's always 14 cents, except sometimes at the end of the year, they have to give everything. They have like a special dividend towards the end of the year or something like that. If you go to 2024, you'll see that 21 cent or almost 22-cent dividend at the end of the year. But look at this, 14 cents from the time of inception, almost pretty much 14 cents, 14 cents. Guess what next month is going to be? Most likely 14 cents. So it's always been 14 cents, pretty much. That's what it seems like, except for the end of the year. They have this special type of dividend at the end of the year. So you can see, like, this is just the price chart. You see that they're pretty much flat. I mean, they obviously gyrate with the market, but you could see that the inception price and the current price is about the same, at this point in time. So let's say 14 cents for $20.34. Let's do the math. So we'll take 14 cents, multiply by 12, and this doesn't include the special dividend, so it's 168 cents. Or maybe we could do 0.14, so it's $1.68, right? And you take $1.68 and divide it by $20.34. You multiply that by 100, so it's right now currently about an 8.25% dividend. And they also have, they kind of stable. Sometimes they grow a little bit. They give you possibility of growth. I mean, you could see that they do gyrate with the market, but they tend to, outperform at times. And if I haven't mentioned before, I'll mention again. According to, if you're looking at the Sharpe ratios, they have a better Sharpe ratio, which shows better risk-adjusted returns. And you could use it a bit of a possible diversifier, maybe mild hedge, or maybe it's kind of like a little hedge fund within itself, possibly. Anyways, let me know what you guys think about CEFS from SABA. Does it deserve a small position in your portfolio or maybe not? I hope you guys have a wonderful trading day. All the best.